If you want to become a trader in stock market or maybe forex market, then you should understand the basic concept of trend identification. That's right, and there are basically three types of trend in the market. First one is the uptrend, where the market is rising, the price is moving up. And in this process, the price forms a pattern which is called as higher top and higher bottom. So you can see on the screen, this is the top and bottom which is formed by the price. And what happens is that the price breaks the top and forms another top which is basically higher than the previous one. And it is called as higher top. Along with that, price forms another bottom which is called as higher bottom. And this pattern of higher top and higher bottom continues in the market until there is uptrend in the price. The second trend is the downtrend. And in a downtrend, the market is supposed to be falling, the price is coming down. And in this process, the price forms a pattern which is called as lower top and lower bottom. So this is the bottom and the top which is formed by the price. So what happens here is that the price breaks the bottom and forms another one which is called as lower bottom. And as well as another top is formed by the price which is called as lower top. And this pattern of lower bottom, lower top continues until the market is in downtrend. The third trend is known as the sideways trend. And in this type of trend, the market is not going up nor going down, but it has been stuck between a resistance and a support. So just remember that if the market is in uptrend, we will be bullish on the stock. That means we will look for buying the stock. And if the market is in downtrend, then we will look for selling. And if it is in sideways range, then we will wait for a breakout to trade upon. So these are all three scenarios, the three trends the market can be in. For more such informative content on technical analysis and trading, make sure that you follow and subscribe to Tradingfyive.